And good afternoon, everybody. This is Michael Filighera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the inaugural coverage for Bitcoin on an Elliott wave basis. And today's date is Wednesday, August 25th, 2021. And thank you for checking out this video. And within it, I'm also going to be laying out my current view or Elliott wave count for Bitcoin now that I have enough information and data-wise to produce at least a weekly chart so I could start to put together a picture. But now what I want to do first is to give you a little bit of a background on Elliott wave itself, because then you're going to get an understanding of where I'm coming from and what I'm discussing. So I want to start by just talking a little bit about rhythm in nature. R.N. Elliott's findings that he wrote in 1936 in the original The Wave Principle, he began to discuss that the universe is ruled by law, and that often it's that law that is misunderstood or not accepted. So in other words, is that we've come to expect the sun to rise every day, the sun sets every day. And when that happens, it's a full cycle, it's a full complete movement. And then that movement can be tracked by days, and then days turns into months, and how the months came about. But they are all under that this happens universally and in nature. There are cycles in life, there are cycles in the seasons. And so we can continue to find this in nature. So he begins to talk about that there is a law of nature, and the fact that man is, for all intents and purposes, of nature, then we also are ruled by that universal law of nature. And even though we don't necessarily understand a particular phenomenon, like the wave principle, or that the fact that the sun rises and sets at particular times each day, and when the seasons come and go, what causes that? I mean, that now we can figure it out because science has advanced and human beings have advanced. But years before, they just expected it, but didn't understand why. So man is no less a natural object than the sun or the moon. So therefore, his actions too, in their metrical occurrence, they're subject to analysis. Human activities, while amazing in character, if we approach them from a rhythmical basis or with a rhythmical bias, they contain a precise and natural answer to some of the most perplexing problems we have. In addition, because man is subject to rhythmical procedure, calculations having to do with his activities can be projected far into the future with a justification and a certainty heretofore attainable, or unattainable, I should say. So a lot of research has been done in connection with what we can term as human activities. And it indicates that partially all developments which result from our social economic processes follow a law that causes them to repeat themselves in similar and constantly reoccurring serials of waves or impulses of definite number and pattern. This is important so that because we're human and because we're a part of nature, that all of our activities that indicates that partially that all the developments of which result from our social economic processes follow a law, and that is the law of nature. And so it is that it is necessary to take in the field of man's activities some example which furnishes an abundance of reliable data. And for that purpose, R.N. Elliott himself found nothing better than to really display and track human activities in the social economic processes. Where do you want to look? He looked to the stock market. He began to chart and follow the Dow Jones. And in that process, he realized that there's no other field in which prediction has been essayed with such great intensity and with so little results. So therefore, economists, statisticians, technicians, business leaders, bankers, they've all tried to get into this, what looking out to the future to predict what prices would be on the New York Stock Exchange. But I'll tell you what particular process has stood the test of time, has been really followed very cleanly and very succinctly through all of the ages. So in other words, it's like it worked back when everything was handwritten, everything was hand-coded, when we had chalkboards, et cetera, because it was the stock market and it was fueled by human activities and emotions. So those were trackable. And by doing so, Elliott was able to put together that they actually, what they formed were building blocks. So that's when he started to realize that it was a repetitive, that our actions and our emotions and our behavioral processes were very trackable, particularly when it came to finance. So having all of that, it is becoming very important to realize that there is great opportunity and potential for continuing trading when you can have an idea of what parameters you can put around a particular move, what to expect from that move, what to expect coming forward, and then having the ability, when you combine this with the Fibonacci number sequences, and then you begin to learn the relationships between these different waves and how they interact with one another, then you're building a picture that you can carry forward, that you can look out and go like, well, this is what's occurred. This is what more often than not is what happens next, and et cetera, et cetera. And then you can start parameters, because through his work, he began to realize what happens after a particular process is completed. And then what does that mean for the next process up? So in other words, when you begin a count, this is on a weekly basis. So one thing that Elliott notated was that the impulse, so that would be the impulse of what the market was doing, would shape 5 waves in the direction, of that impulse. So once those 5 waves were complete, Elliott noticed that they were then followed by a series of 3 waves, and that would be here. And he labeled those with letters and these with numbers. And those were to make the distinction between the two. But often he found that when this was complete, it completed the first and second wave of a larger degree. So in other words, once this and this were complete, it formed the first 2 waves of this minor degree. And then it repeats again. But then he started to notice other details that happened within these projectable movements. So over time, he developed and sustained the Elliott wave principle. And he then noticed that because of this building block structure, that he needed to discern what degree, at what time frame fits that degree. We can go all the way down to a 2-minute chart and see the same patterns that we see on that weekly chart. All right. That's a 2-minute chart that is just there, but here are the same patterns. See, we've got the 1, the 2, the 3. I'm going to go back to that 2-minute chart. The 1, the 2, the 3, It all fits. That's a 2-minute chart. And it's basically performing the same pattern as it did here. So this is a weekly. This covers from day one of when Bitcoin futures were introduced on the Chicago Mercantile Exchange. December of, well, this is how far I can go back, December of 2018. And that's where I've labeled one. But if we look again at that 2-minute, it has a top, it declines, it rallies, it falls, and then rallies strongly and starts to fall. Let's go back to that 2-minute. Rallies, declines, rallies, declines, and rallies, and then starts to fall. It follows the same pattern over and over again. If I'm doing this on a 2-minute, it's building the 5-minute, which takes more time, right? That takes us all the way up to that top and gives us some more detail on what the decline looked like. This is a little bit longer decline, of which this 2-minute is still doing. Then I can go out to the 15-minute chart and you get it again. Now you're getting a bigger picture of where that top really was. Now I'm on the 30-minute. Again, mark this top. That's just the 50,585 top. And I'm still going to go out and you're going to get to the weekly and you're going to find that 50,585 top. That's the day hourly. Let's go out to the daily. Here, check that, 50,585. So see how many patterns, all the same, but this is where they started. And this is where we began our walk on the weekly. So that's all from there. Look how much happened before it. And it's the same picture. So these things repeat. And then when you contract them and you label them, you build your own building block. You build your own scenario of what you can expect next. So in essence, you truly, as my ebook suggests, you truly are your own guru. So by learning the technique, which has stood the test of time, and applying it correctly, because there are rules and there are guidelines. There are rules you don't break and there are guidelines that help you. They're exactly what it is, a guideline. And even in our age of electronic, where everybody is now trading electronically, which changes the whole canvas of how we trade. If you're an older trader like myself, who was a pit trader, I traded on the Pacific Options Exchange. I've traded on the London Traded Options Exchange. I've traded in Amsterdam on the European Options Exchange, on the German DTB, and then came back to the US. But then in the start of the millennium, in like 2002, 2001, 2002, everything began to move off floor. So the floors became almost obsolete and everything went electronic. And that caused a learning curve for a pit trader. But at the same time, we're still in a learning curve because Bitcoin is a brand new market. It's been around for a while and it's exploded in its intensity and its broad-based participation because it's a new technology that is moving at the speed of light. So these are all part of what we track in Elliott Wave. And this is why it continues to stand the test of time. We as human beings have not changed. We continue to be run, or we live under the law of nature. There's no way around it. We live in a Fibonacci sequence. If you learn further on how Fibonacci is used, all of that is applicable to us as human beings. It's applicable to what's around us. It's applicable to nature. So why not get along with it? Why not just accept this is the way it is because this is how it moves? And that helps you then on how you choose to trade and what you're trading and whether you want to be long or whether you want to be short, or do you need puts or do you need calls, et cetera, et cetera. So with all of that in mind, I would like to begin to talk about the building blocks and where Bitcoin is right now in my estimations. Again, from my stand, from the data that I can get, I've now been able to move on to a weekly chart and see discernible patterns. And being that this is new and I don't have the data before this, I start at the beginning, the number one. But I started on an intermediate level because of the time frame. I'm on a weekly chart. So I'm not going to start at the highest degree because I don't think we're there. That would be like starting at the top and trying to work your way down. Now, granted that this whole process is top down. You start with your biggest picture and you take it down to your smallest picture. But as you now see, we need to develop and figure out this bigger picture right now. So that's why we start here before we can move it down, even though it's the same patterns. How do we want to label them is what really it's going to be, because all the labeling starts on your largest picture. So I'm starting on an intermediate degree. Now above this degree, we have a primary degree, we have a cycle degree, and we have a super cycle degree. The primary degree can take several years to unfold. So again, at some point, this may be moved to a primary degree level. But right now, this is where I'm leaving. Because no matter what level or degree I go, that's just a time factor. Everything still, all of the rules, everything still applies no matter what degree you're counting from. So again, I'm starting on the intermediate. That's labeled in yellow. And then within an intermediate impulse wave, so this would be waves 1, 3, and 5 within an impulse wave. There are 5 waves. 1, 2, 3, 4, 5. 1, 3, and 5 move in the direction of the trend. Wave 2 and 4 correct it. So wave 2 corrects wave 1. Wave 4 corrects wave 3. Wave 5 completes that movement and then sets up for an ABC corrective wave. So we have impulse waves and we have corrective waves and or counter trend. Right now, the trend is up. The trend was developed up from day one of when Bitcoin came onto the market. That's why I've labeled this as wave 1. When the market first opened, this was where it got to. And then it immediately dropped from there. So I have to start 1. It came in at the top of 1. And then it declined in a wave 2. Now, so this was 5. Then we get 3, labeled A, B, C. That then completes a total movement. That's a complete movement under Elliott terms, right? A 5-wave impulse followed by a 3-wave corrective or counter trend move. Now we build on that, as I've already demonstrated. This is 1, 2. Now we're going again. And so we're going to go, we need to count 1, but now we're counting on 1 degree lower. So we start over again, but now we're coming down to the minor level, right? So we're going to move in a 3rd wave, but within that 3rd wave, I'm going to find 5 waves of minor degree. So that's where we start from. 1, 2, or excuse me, 1, and then 2. So this is a 5-wave structure. This is 3. It fits into what Elliott's observations were and his rules for each particular movement. Then we drop into a 3rd wave. So again, remember, on this intermediate level, I'm looking for 5 waves up because it started in that direction. Right now, I've got 1 and 2. I'm not done with the 3rd yet. So this tells you A, time, and 2, breadth, from how high can this go? Now, I know that we've all heard, Bitcoin's going to 150,000, Bitcoin's going to the moon. And depending on what levels you decide to choose using different sets of sequences, you can come up with some great numbers. And I will show you how right now, what I would expect a little bit further out. Again, Sorry that I digress, but there's a lot to explain. So within this first larger sequence of 5 waves up, we're now in that third wave. We have done wave 1 and wave 2, again, building blocks. Now, it is to be noted that within the third wave, one of its characteristics is that it's usually, or most often, the longest and the strongest wave out of that 5-wave sequence. And the 5-wave sequence we're counting it on is the minor degree. But we can see as we go down, we've got a couple of sets of 5 waves. That's because it's usually, number one, it will form its own 5. We saw that here in wave 1. But within it, it again subdivided. So the overall third wave, the minor third wave, will subdivide into its own 5 waves, which are going to be on the minute level. Then what happened was within that third wave, it also then subdivided into its own 5-wave structure. And that we term as an extension. So it's a third wave extension within a wave 3. That adds power and intensity and ground covered, so distance, to any third wave. That's why they become the strongest, because you get us extension within it. Now, if you're not in tune with these building blocks and the procedures that they go through, then you're not going to likely catch the moves, because you're going to be thinking, okay, we go down, okay, we go down. But if you can wrap parameters around the move and parameters around the move, you're going to be able to see, oh, okay, what can I expect? I can run Fibonacci's. Oh, I can expect it down to here. Well, what's the relationship of what's happening now to this and then this? And they exist because we are all subject to the laws of nature. No way around it. It's going to happen. Our emotions are pretty standard. And often people think, well, you can control your emotions. Yeah, we know how that works out, don't we? We can put parameters around our emotions, so we can look at what extent, and that's what we're doing here. But we're doing it on as humans react, or the human behavioral reactions to finance, to money, to all of that goes into that. So that's why we get wave 3 being the longest and the strongest, as it is the middle of the larger impulse. Then it's going to be that point of recognition. See, it opens, it slides, it loses 7/8 of its, or at least 3/4 of its value in months, a few months, from about a year, actually, from when it came on. Everybody wrote it off. Then it started to rally. It's just a good luck bump. And it starts to decline. And here they decided it was all trash when it broke down a particular level. Boom, it goes down. It's just a bottom. It's just a low. But I imagine at the time, it was like the expectations was it was going to zero. They were worthless. Then it starts to rally again. If you've got your count and you know what comes next, you're already positioned for this rally. And if you know that you, more often than not, a third wave is going to subdivide into its own inside of the 5 waves that are going up to create the third of this level. See how they're building blocks? 1 builds to that. This builds to that level. When we get the 4 and the 5, we will have built to this level, but only wave 3. So we still understand and know that we have a wave 4 and then another wave 5 rally. Interesting, right? So now we know how we got up to here. This is the current high for Bitcoin, 65,520. And it was a beautiful rally. And you got everybody on board, and everybody was talking about the amounts of money that they were making. Then we have a little downturn. And it quickly loses 50% of its value. Basically, right? It traded 65,520, got a low of 28,880. Wow, that's pretty low. So it matters to what the pattern was, and then it matters as to what the pattern comes next. So this is where we're at. And from my Elliott experience, you're looking for an ABC correction down. Now, it's on a minor degree, so within that, we're going to have 3 waves of minute degree. And so what happens? It comes down in 5. And when it was down at this point, I was like, okay, that's 3 waves down, A, B, C. I'm going to stick a 4 right there. And until it came down and broke it several weeks later, that remained the count and what expectations moving forward were. But the second it broke that, it turned this into a 5. Well, here's a rule. 5 waves in a counter trend move, right? The trend is up. 5 waves in a counter trend move is never the complete correction. Okay, let me say that again. In a 5-wave rally, and the trend is up because we're just completing wave 3. 5 waves down counter trend, because we're expecting a counter trend move. 5 waves down on its own is never the entire correction. So this then becomes a part of that larger correction called minor wave 4. This cannot be the entire correction. So therefore, it's just wave A. And we're looking for A and a B and a C. Well, then we got A, B, and this beautiful 5-wave rally. There's C waves. Again, I'm just going to toss out these rules. Doesn't mean you have to remember them. C waves, which this is, are always 5 waves. Okay? But limited because of the scope of where they're participating. Now, if this indeed, 50,585, if it indeed completed the C wave up, then that completed the B wave. And now we'd be looking for a C wave down. Now, what I can do, now we can put through, I'm going to show you a couple of different Fibonacci extensions. I can do, one that I can do is to look at what wave 3 would be, but I cannot yet do, there's one that I use and I love very, very much because it helps me to put down what I think this 5th wave, once it gets going, minor wave 5, where it could come into. And you can get upwards, let me try, above all this. It gets upwards of 90,000. So yes, these are all very strong possibilities. When this is all done, and I can run a Fibonacci extension for wave 5, it would be from the bottom of wave 2 to the top of wave 3, but it's going to be wherever 4 bottoms. So let's put one in first that can give us an indication of what this expected C wave might look like. Okay, there we go, down to that bottom. There you go, and up to that. Okay, so basically wave C, it has a relationship to wave A. So what's coming is going to be related to what has already happened in terms of wave A. Now, C waves more commonly usually going to come in and put in a low below the A wave, the low of wave A. That's at 28,800. So now we start looking at levels that could fit. We have a 70.5, which is also known as well, it's a Fibonacci level. But this would be where the C wave would be 70.5 times the length of wave A. 22 to 90 is going to be where wave C is 78.6% of wave A. Those fit very clean. Right now, we have the 200-day moving average, weekly 200-day moving average at 2471. Also, in the hood, can definitely come down there, but it's not going to be the end of the world. It's a correction. Wave 4 corrects wave 3. Most common areas for this size of a wave, and again, it's Bitcoin, so it operates a little bit differently. It is a market that moves around the globe, and that's part of its allure and its assets. So we're moving assets around the globe at the speed of light. It's pretty amazing, and how things are set up and how they protect that. So there's a lot of givens and a lot of workings in here, but let's just say it's still operated by and controlled by humans. It might be all computerized and it is all programmed, but it's humans coming in and buying and doing the trading. So therefore, they're the ones shifting the assets around the globe. So anyway, wave A came down to this fourth wave. Now, the first support would have been that it falls into this area, this particular fourth wave. And it overshot. In fact, it went down quite a bit more. But it did come to within this particular fourth wave. And that's how I continue to measure. So if it continues to drop and gets below this level, which is all the way down at 13,915, this could remain a 4. It just cannot overlap. A fourth wave in a minor degree cannot overlap the price territory of the minor 1. And that starts right there, 13,915. So that's how far it can drop before you'd have to realize, oh, this was an A wave, a B wave, and a C wave, and now we're going to correct from that level. But I wouldn't start it that way. So again, I would not be expecting a drop to go much further than here, possibly here. But it's going to be enough to scare everybody. It's going to be enough to empty out a lot of people. And that is what corrections can be about. But if you have ideas, that makes it tradable. It makes it tradable on the way down. Because number one, there are options. Number two, it's a future. And if you can trade the future or a derivative of the future, it could be very tradable. And also there are various other markets that you can trade. Now, if the wave A comes down and stops there, I'm going to add one additional. So let's just call it 25,237. Now let's take a look at what that fifth wave that would be anticipated upon its completion might look like. And I said 37. Okay. Too far. Maybe. Hold on. Let me just check this because this is where it's going to get interesting. So I want to do this properly. 70 years out. Oh, I'll just leave it there for right now. Sorry, I don't want to take too much time, but I would be very precise on that level. So we're going to call it there and here. Now I am going to take off this one, which gives us that downside. Now we're just looking like this is where it completes. And this is where we'd be looking. So the relationships between a fifth wave, which is what we'd be looking like in minor degree, and a third wave are as follows. The first one would be is that wave 5 is equal to 0.618 of the distance of wave. We didn't get that right, did we? I'm going to have to change this because it really does change. Yeah, changes it a lot. 100 points. 65,520. And I'm going to call this 25,22. 22, I think it was. We'll just change it around a little bit. Yeah, that fixes it. So the first one is that it's 0.618 of the length of the third wave. And that's 63,150. Well, I'm also looking for wave 5 to take out that high. So no, not likely. Then we have the next layer, which is 0.750, and that is 68,489. And then as it goes up, it is not uncommon where wave 5 will be equal in length to wave 1. And that's up here at 86,595. And these are its extensions. It could get 1.236 times the length of wave 3. Right? Here's the breakdown. I digress for just one quick moment. Out of 1, 3, and 5, wave 3 can never be the shortest. Does not, it's most often the longest and the strongest, but does not have to be. It just cannot be the shortest. Well, wave 1, we can tell already is the shortest. So wave 5 can extend more than once and produce very dramatic results, okay? So these are why we include these extensions. So if we get this wave 5 and it really goes, then these would be the expectations. That would be 100%, but then we're getting over 100,000, 110,000, 124,000, 130,000. They're all realistic numbers in terms of, is that possible? Could Bitcoin just really just go that high? Well, how many times you've already heard it? Bitcoin's going to $200,000. Bitcoin's going all the way to the moon. It could. And why? Because human behavior kind of dictates that. When things get crazy, everybody jumps. Because there will be tremendous amounts of money being made all the way. So that's what we can tell you about Bitcoin right now. But more importantly, if you're going to be trading this on a daily basis or even every other day or weekly, then it's good to follow an Elliott wave course. And right now, you're looking at the possibility of a $20,000+ decline. So, excuse me, from current levels, that would be a 50% drop. Sorry. And that could put a hard press on a lot of portfolios and force liquidation. But we'll see. The point being also, Bitcoin has survived massive drops in the past. And so you figure out a way how to short it. Bitcoin trades options. So there are ways. In any case, you can plan and then be looking to get long at these levels so that you're ready for the next rise. And the decline on the way down, let me go back down to that 2-minute, or let's go to the hourly chart. You can see decline, but that was a rally. So you trade. Even if you're just buying, stepping in and buying it here, you made over $2,000. So nice move, nice trade. It goes from 47 to 49.50. Nice trade. And there are other ways to participate. Now, I also use moving averages. So there are definite, on a very short-term basis, there are a lot of things to be done. And look at this, 1, 2, 3, 4, 5. It falls such in place. And that's just off of that high, the 50,585 high, which took place on Sunday during build-ups. So, folks, it works. the markets do continue to follow the same patterns. The patterns are building blocks. And I'm introducing it because I wanted to show today where it has come from, where it is going, and what are the most likely probable paths. So today I'm presenting the preferred view. I will next work up, and it might become over the weekend, or maybe maybe tomorrow. If not, it will come over the weekend, where I'm going to give you the alternate view. I always operate with a preferred view and then an alternate view. And that would be, again, that, like I said before, that this was a top, that's A, and we got B, and this is going to end up being three waves. This is an ABC, right? 5, 3, 5. And that would suggest that it's going to go down a lot steeper and a lot harder. Now, it, like everything else, is holding pretty much in place, waiting until Friday when the Fed come out of the Jackson Hole, Wyoming meetings, and Jerome Powell gives us the news conference on what's what on Friday at 10 o'clock a.m. Eastern. So it's holding steady. But you can get a little bit of what people are doing and what they're thinking when we drop down and we look at the arrow. It only goes down so far, and then it rallies back, and it rallies back $1,000. It's still a damn good trade. You know, these are all very tradable. That's kind of what I'm getting to. I will continue to work this down. So what I now need to do is take this on my weekly chart and count that as 5, put this in place, and then begin, and then count that. Then we'll be able to take a look and be very clear on what these counts are. And that's my next stage, that I will be doing that. So again, I hope to bring this in. So we got some already going here. I hope to bring this in to focus very soon. And so also then to be adding Bitcoin and then other cryptocurrencies as I can get the charts built. So a lot will be on data, a lot will be on what's available and what I can do. We can do Elliott on a very small term time frame chart, but understand that, you know, it's counting 1, 2, 3, 4, 5, and you're starting from an absolute beginning point. And so you'll be counting very small, and the turns will be very small. So depending on how you like to trade, you're going to be able to follow it, and you should be able to do it. This is where I'm going to leave this for right now. And I will look to update there are two things: update with my alternate view for Bitcoin, long-term alternate view for Bitcoin, and then also start to follow the preferred count, but on a weekly to a daily basis. Thanks for your watching the video. Thanks for listening. And if you like this video and you want to get more information on Bitcoin, make sure that you subscribe to the page so that you'll always know when the next one's coming out. Thanks again.